Okay, hello everybody, and welcome to Forex 101. Today's session is, in fact, these sessions, I'm really passionate about these sessions. I really am. And we've got an exciting session for you today. Today is all about just helping you to understand what foreign exchange is, how you deal with the Forex currencies, what it's all about, how people trade, and give people an insight into what it means to be a Forex retail trader. Now, one thing that occurred to me is quite funny. I have three small children. Now, with every single one of them as they grow, and in fact, it's not just my children, but I have a history of working in teaching. So I was a primary school teacher. I was in primary education for about 14 years, and in working with children, they always ask why and how. Okay, so whenever children don't understand something, they ask. And the sad thing is, when we become adults, we kind of stop asking why. We feel pressured to know why. We feel pressured to know everything. And I really am passionate. It's exactly the same when I talk about education technology. It doesn't matter what it is I'm teaching about. I really do encourage people to ask questions. So if you're watching this and you have any questions, please don't hesitate to ask. In the holding block, there are no silly questions. So feel free to get involved in the chat. You can add a comment in the comment section, and also just give us some feedback. Let us know how you're finding these sessions and if it's helping you. Also, I want to help people. If there are any terms that we've not mentioned in previous weeks that we haven't explained, please do just type in the comment. But do you know what? I'll tell you what, here's the thing that I do. Usually, when you have these conversations, people get you lost in translation with things. In my head, I'm just like, dictionary, you're forcing me to go back to the dictionary. So if you hear me say any kind of vocab that is just not too clear, just type dictionary in there. At least that way I know there's something that needs explaining, and then you can maybe type the word and then we'll explain that. But we really don't want to get too deep. We don't want to get too complicated. We want it to be simple so that everybody can grasp what is happening. So today's session, let me share my screen. Today's session is going to be, this is session 3. So we're going to have an intro. Well, we've had the intro. We're going to have a recap of last week's session. We are also going to, I'm going to answer, there was a question that was asked, it was either last week or the week before. I apologize, I did not get back to you on that question. So I'm going to answer that question today. And that was a question about the times to trade. Someone was asking, is it okay, they only have time at night time when it comes to trading? So we'll address that. And we'll have a look at currency pairs again. So this is currency pairs part 3. We're going to get into a little bit more detail. So if you haven't got a clue what we're talking about when we talk about currency pairs, please go and revisit Forex 101 session 1 or session 2, if not both, and get up to speed in terms of that. And then we will have a look at trends, what we refer to as trends, and we will have a look at some of the terms as well as the flow of the market. And all of these things are indicators that traders look for to give them confidence to enter into a trade. And then we'll have our basics live Q&A, and we have another special guest this week for the last portion of the session, and I will introduce him closer to the time. So let's crack on with today's session. I hope everybody's okay. I hope everybody has had a good day so far. So just to recap, last week we spoke about currency pairs, and we know that in the markets, in the foreign exchange markets, we don't have just a single unit that we're trading on. We have them paired together. So you have what's called the base currency, which is first, and then we have the quote currency, which is the second one. And we also looked at how candles are formed. And if you weren't with us last week, or if you haven't watched last week, just to recap, the example that I gave was what's referred to as GBP, which is the Great British Pound. And then the second currency was the US dollar. So which one is the base? Which one is the quote? Well, we know that the GBP, that is the one that comes first, that is the base currency. And then we have the quote currency, which is the US dollar. So what does that mean? Oh, see, I hear you scream. Well, when we look at the charts, we know that time is along the x-axis that is moving horizontally. So as time goes on, price either moves up or down. So what we would see on the GBP USD chart is that the example given was a specific decimal of 1.24, etc. Now, what that is telling you is the amount of dollars, that is the quote, you would get per base. So the base in this instance is the Great British pound. So for £1, you would get $1.24. That is what the charts will tell you. So that is how currency pairs work. So you will see the initial currency, which is your base, and then the quote is the price that you would see at the side. And as we continue in the weeks, you'll see that that makes hopefully a lot more sense as we continue to look at the different currency pairs. So let's get into the question that I wanted to answer from the previous session. So somebody asked, when is it good? Is it good to trade at nighttime? Some people only have time in the morning. Some people have time in the evening, some in the afternoon, etc. Well, the time that you trade and what happens in the charts is all down to what's known as the trading session. So we have specific sessions happening at specific times of the day, and that really does depend on the time zone that is active at that particular time. And that will make sense, hopefully, through this table. Now, again, this is supposed to be very simple and straightforward. So if it does start to get a bit too fast, if you want me to slow down, please don't hesitate to put something in the comment section. Okay, so trading sessions. So here are the trading sessions. So we have, first of all, the Sydney session. I'm going to read along this chart horizontally. So in the first instance, I'm going to enlarge this as well, just so that we can see clearly what I'm talking about here. So in the first column, we have the trading session. So we have 4 different main sessions: Sydney, Tokyo, London, and New York. The next column along talks about it shows you the times that those sessions are mostly active. That does not mean that people in those regions are not trading at any other times, but this is really to do with the main institutions that are trading during those specific times. Then we have the main pairs. There are more pairs that are involved and traded during those times. But these are the main pairs that are the main currencies that are traded during those times. And then what I have as the last 2 columns is whether or not there is high or low volatility during that specific time frame. So if we go across the first row, we see that the Sydney session begins at 9 p.m. and ends at 5 a.m. And this is according to British Standard Time. So using Greenwich Mean Time as the base, it opens from 9 till 5, and the main pairs that are traded are what's referred to as the AUD NZD pairs, and that is the Australian dollar and the New Zealand dollar. Now, in terms of the different types of pairs, we're going to get into a more detailed explanation of the currency pairs and what's traded a bit later. But for now, just bear with me as I talk about these pairs that are in front of us now. The next session down is the Tokyo session that begins a couple of hours after the Sydney session, which is from 11 p.m. British Standard Time till 8 a.m. And the main currency that brings the most liquidity is the Japanese yen. That is what JPY stands for. And then following that, we have the London session, which begins at 7 a.m. and ends at 4 p.m. And the main pairs that are traded there, naturally, we have the Great British Pound. EUR stands for the Euro. And then CHF actually stands for the Swiss franc. And again, as I said, there are other currencies traded during that time, but these are the main ones that have the most action, the most liquidity behind them. Then finally, we have the New York session, which is from 12 p.m. British Standard Time until 8 p.m. in the evening. So what do we notice about this? We notice that in terms of volatility, there's not so much volatility during the Sydney sessions in comparison to the London and New York sessions. And there is a reason for that. Now, the most liquidity that is injected into the foreign exchange markets takes place during the London session. Now, the London session crossover to the New York session is also a major point in which liquidity is injected into the market. So that just means, simply said, a lot of people are trading during the London session. There is a lot of money that is exchanging hands, a lot of orders being placed. So when it hits 7 a.m., you will see quite large spikes in the foreign exchange charts regarding the pairs that you're looking at. So you'll see large injections of liquidity into the market during the London and New York sessions, and there is not so much during the Sydney and Tokyo sessions. And what I want to show you here is the overlap. So what we have is the Sydney session. We know that starts first. Soon after, the Tokyo session starts, a couple of hours after. And what that does is the Tokyo session in the morning, as that is coming to an end, that is when the London session starts. So the overlap from 7 a.m. when the London session starts, which is the last hour of the Tokyo session, there is major liquidity that is injected into the markets during that particular time. So there are a lot of traders, whether they're based in the UK, elsewhere around Europe or around the world, that will make sure that they are up at that time to place trades because there are major movements that take place. The next crossover area is also an area in which a lot of liquidity is entering the market, and that is the crossover between the New York session and the London session. So as New York comes into play around 12 p.m., usually between the hours of 1 p.m. UK time and 3 p.m. all the way up until 4 p.m., there is another major injection of liquidity. And in terms of going into more detail, you can have a look. I don't want to get more complicated than that, but if you maybe take a screenshot of this section here, just to remember and just like keep note of the times of the day. Now, what does that mean? Does that mean that you cannot trade during the times where there isn't a major influx of liquidity? No, that is not the case. In fact, the injection of liquidity, it just means that there is a more volatility in that particular time period. That means that more things are happening, and there's a possibility of moves happening in your direction or against your direction. So people are either making lots of money or in the same token, by the same token, losing money as well. So the explanation here, in answer to the person's question, they said they only traded at night. They would be essentially trading during either the Sydney or both the Sydney and Tokyo sessions. So there is money to be made during those times. Of course there is. You can place trades at those times. The amount of pip movement that takes place will not be as much as the movement that takes place during either the London, New York session or the London, New York crossover or the Tokyo, London crossover sessions. So I hope that is clear. I hope that is simple enough. Again, if anything isn't clear, please type in the comments. And I'll do my best to answer and clarify any points raised. Okay, so they are the major sessions, and as we said in previous sessions, the foreign exchange markets are open 24/5. So that means they are open 24 hours a day, 5 days a week, and according to UK time, they will open at 10 p.m. on a Sunday night, and they will close at 10 p.m. on a Friday night. So if you're based in the UK, those are the times that you work with to know when the markets are open. So on a Sunday night, 10 p.m., the markets will open, and they are open consistently throughout all day, all night until Friday at 10 p.m. Okay, so let's get on to the next slide. So in terms of the pairs, I forgot to change the title there. We're not dealing with the trading sessions anymore. We're dealing with the currency pairs. Now, currencies are paired into three major categories. So we have the Forex majors, we have the Forex miners, and then we have the exotics. Now, I have to apologize because usually with slides, I don't show this amount of text all in one go. And this is kind of like the nightmare slide. So I apologize for that. However, what we can do is potentially take a screenshot of this and just have this in knowledge. Now, let's just deal with this one row at a time. So what are the majors? So the major pairs are Euro USD, USD JPY, GBP USD, USD Swiss franc, USD CAD, AUD USD, NZD USD. What do we notice about all of these pairs? That's right, you are correct. They all have USD attached with them. Now, why is that the case? Well, that is the case because actually previously, prior to the Nixon regime in the US, President Nixon was elected and he moved the US dollar off the gold standard. And basically it was agreed that the US dollar will be the kind of the current currency of comparison, to put it in simple terms. So things are compared to the US dollar as opposed to it being compared to the value of gold. So with that being the case, all of the pairs that are paired up with the US dollar are considered the Forex majors. Now, they are usually the pairs in which there is the most movement in terms of trades. However, movement does occur, and major movement does occur in other pairs as well, that they are known as the Forex majors. So you can see there again, Euro, US dollar, Japanese yen, JPY stands for Japanese yen, Great British pound, US dollar, Swiss franc, CHF, I think is probably the only identification symbol that is not, you can't really deduce Swiss franc. Well, I couldn't anyway. CHF and Swiss franc didn't quite make sense to me, but there you go. CHF is Swiss franc. Then we have USD CAD, which is the Canadian dollar, AUD, quite straightforward, Australian dollar, USD, and then New Zealand dollar and US dollar. Next, we move into the miners. Okay, now with the miners, we have the Euro, Great British pound. So that is the first pair there. And then the next pair, we have the Euro, Australian dollar. And then we have the Great British pound, Japanese yen. And then the New Zealand dollar, Japanese yen. And then finally, the Great British pound, Canadian dollar. So these are traded as well. Yes, there is liquidity and movement and volatility within these pairs. There's not as much movement as there would be in the other pairs. And then finally, we have what's known as the exotics. And yes, these are traded as well. And there is movement in these. So we have the Euro, Turkish lira. TRY is the Turkish lira. And then we have the US dollar and then Hong Kong dollar. And then we have the Japanese yen and the Norwegian krone. And we have the New Zealand dollar and the Singapore dollar. And then we have the Great British pound, and the South African rand is what ZAR stands for. And then finally, we have the Australian dollar and the Mexican peso. So this is how the currency pairs are paired and what is available for trading. And there are others as well. These are kind of the major ones within those categories. There are currencies that I haven't mentioned that aren't here, such as the Israeli shekel is also one, as well as many others. I'm not going to start recording them from memory, but there are many, many currency pairs that can be traded. Take a screenshot of this, save it if you're going to study what takes place in foreign exchange markets. These are the major pairs, majors, minors, and the exotics. Okay, how are we doing for time? I think we're doing okay. Okay, again, I haven't changed the title there, but it says trading session. This is what happens when you're working in a rush. This slide should be entitled trends. But here we have an upwards arrow. Why have I got an upward arrow? Because if we remember when we go to the charts, there will be movement up or there will be movement down. So price will either be increasing, or it will be decreasing. So when we see movement up, that can be referred to as buy movements. It could be referred to as a buy candle if you are looking at the candle formations on your chart. It's also referred to by nickname as bullish movements. So when you hear the term bull trend, bullish movements, just know that price is moving up. And again, it can be referred to as an uptrend. The next type of movement is a downward movement. And this could be referred to as sell movement, sell momentum, bearish movement, or a downward trend. So the comparisons between the two, and just as a point of vocab, if you hear somebody saying the charts were very bullish today, that means there was a strong movement up in the currency pairs that they were looking at. And conversely, bearish movement refers to the downward trend or the downward flow of the markets. So markets will either be moving up or they would be moving down. Again, I've used a green arrow and a red arrow to illustrate that, but depending on how you have your charts set up will depend on what you see in terms of the color, etc. Now, I want to kind of demonstrate and illustrate this more, as well as introduce a third type of movement that would happen on the charts. And you may be asking, if you're very new to these sessions, you may be asking, why is it important to know whether it's a bullish trend or a bearish trend? Well, that helps you to determine what type of position you are going to be taking when you want to place a trade. If you know that it is a bullish trend, then that will inform whether you're going to take a position that is bullish, going with the momentum, or whether you're going to wait for that bullish trend to end and then go against that movement into the downside, which is a downward trend or a bearish movement, or take a sell position. So that's just some vocabulary that we're going to be using, and hopefully you can get more familiar with that terminology. So if it's moving up, we can say it's a buy, bullish, or an uptrend. And again, if it's moving down, as a sell momentum, bearish movement, or a down trend. And again, if you're watching live, please slow me down if needs be, or type in the comments any questions that you may have. So I'm going to switch to the charts now and get TradingView up. So let me take this screen off. I'll remove this from the screen. You're gonna have to look at me for a few seconds while I re-add the screen, because I need to change windows. So, okay, here we go. So hopefully you can see this chart here. This is back to TradingView. We had TradingView up last time as well. And what we can see here is, I think we had a look at this last week. At the end of last week's session, we were with Richard and we were discussing the charts. And right at the end of our discussion, we saw some major movements going up. Yes, there it is. Okay, so I typed this up last week. You can see I haven't opened up TradingView since last week. Let me get my face back at the side so that you can see me. There we go. Okay, so we were talking and I was going through the session last week, and I was discussing with Richard this pattern I noticed here and the fact that it was moving up. At the start of the session, I think we were around here, and then this huge candle moved up. And if you watch last week's session, you'll see that Richard and I spoke and said that type of move is not natural, and it indicated an aggressive move from potential banks or possibly hedge funds moving price in that direction. But we did say that price should move down and balance out, and we can see that price did exactly that. In fact, it continued to go down to the point where we've now gone down into what I would suggest is a new recent low, because it hasn't been this low with this currency pair for a long time. However, I digress. Let me come back to what we were discussing, which is the trends. Now, hopefully you'll be able to see here that the red candles indicate that price is moving down. Green candles indicate that price is moving up. So here we can see that there is a bear trend, a downward trend, and price is moving down. So this means if we're talking about the base and the quote, in terms of for £1 currently, the price stands at $1.22 and it is falling. So that means we are losing value in the pound and getting less dollars per pound. That is what we understand to be happening now. So what we can see here, if I were to use this line, and I'm not going to get into too much of the analysis side of it, but what I want to illustrate here is that in terms of this diagonal line that I'm drawing, price was at $1.24, $1.24, and it's moved all the way down to $1.22. So this shows me that the price is moving in a downward trend. So this is something you can identify as a downward trend. If you refer to our previous sessions, you will know that each one of these candles represents movement of price for the hour, because we see here, this is an hour chart. If I were to change the view, it would have a different amount of candles for that particular time period. Okay, so we are now coming up to past. So in terms of this candle here, we can describe this as the hour candle. In terms of the time that's passed, the time now is, let's see, it is 3:27. So this hour candle so far is made up of two 15-minute candles. Okay, so we have the first 15 minutes and then the second 15 minutes from quarter past. So if I change this view from an hour to 15 minutes, we'll see that the hour started here at 3, and then the second 15 minutes is here. And when it goes past past, a new candle will form. Again, I digress. You need to tell me off because I'm talking about time frames instead of trends, which is what we're supposed to be looking at now. Okay, so this is an example of a downtrend. What I want to now show you, I'm going to delete this XABCD. Let's delete this text as well from last week. I have to watch last week's session to figure out what we were talking about there. But let's have a look at this section here, because what we can see here is previously price was at $1.22 previously, and we can see from the tool that I have, if you look down, vertically down, we can see that on the 21st of April at 5 p.m. price was previously here. But since then, as time went on, it went all the way up here. So yes, we are looking at an uptrend or bullish movement. Let me get rid of this. So the trend has moved up. Excuse me. It's moved upwards, and it is what we could refer to as a bullish movement to the upside. Now, within this, what I'd like to focus in on is this area here, because this area here isn't really moving up and it's not really moving down. I'm just going to use my rectangle tool to just highlight this section here, because what we can see is you can't really strongly say that for the amount of hours that have passed and the amount of time that has passed here, that price is strongly moving up, and you can't really say that it's strongly moving down. Now, this area is what we would refer to as a sideways movement, and it's not really encouraged to trade when there is a sideways movement, because we're not really sure what price is going to do. Is it going up? Is it going down? We're not sure. So I'm going to just enlarge the chart here so you can see fully. And what we can see from this section here is that, or should I say, sorry, it's also referred to, you can hear it referred to as a sideways movement. You can also hear it referred to as consolidation. And what tends to happen when there is consolidation, you would want to wait for price to break out of that zone. And that would be a specific strategy that a trader would look for so that they can have a more confident position within the market. So when it's moving sideways, you wouldn't necessarily want to get into it because you don't know, is it going to go down or is it going to go up? You would want to wait for specific movements to take place before you would get into a trade in that position. So I'm hoping, I've been told that the graphics are unclear. Hopefully it's better now. Okay, yeah, see the thumbs up there. Thank you very much. So this is the third type of movement. So let me type that in for you here, just so that you can have that as something to refer back to. So you can have a sideways movement that is referred to as consolidation. This is when the buy orders and the sell orders are in balance. So the buyers are trying to place trades to push price up, and the sellers are placing trades to try and bring price down. But there is more or less an equal amount of volume with those trades. So that's what creates a pattern of consolidation within the markets. So today, in terms of trends, what we've learned is that there is an upward movement that could be referred to as a bullish momentum or an uptrend. We also have a downward momentum, which is referred to as a downtrend or a bearish movement. And we can also have a sideways movement that is referred to or can be referred to as consolidation. So I'm hoping that has been helpful today. We've covered a number of different things and we are getting there. I think we're kind of building on our knowledge now. We should be able to understand that in Forex trading, there are two currencies that are paired together. We should understand that there is a base as well as a quote currency. We should understand also that there are major pairs, minor pairs, as well as exotic pairs. We should know that there are different trading sessions. So that means that, yes, you can trade at any time during the day between Monday to Friday. But the amount of movement that happens, what's referred to as volatility, will vary depending on who's at play during those sessions. And then also we've looked at the trends within the market. As the weeks go on, we're going to look in more detail at how to actually place a trade and something that's referred to as a market execution, which is what a trader will do to actually take a specific position within the market. And we're going to do that by actually taking trades together on a demo account. So I'm going to give you homework and I'll tell you what that is a bit later. But for now, I'm going to bring in our guest, who is none other than Mr. Pemi Opaye. I hope I pronounced your surname right, but he is a trader. Good afternoon, Pemi. Thank you so much for joining us in Forex 101. How are you?
Can you hear me?
Yes, I can. Thank you. Loud and clear. How are you doing?
Yeah, I'm not too bad, man. How are you?
Yes, I'm well. I'm well. Thank you. What do you think of the session so far today?
Yeah, I liked it. It was very clear, very concise, and you did a really good job in not like trying to use too much like those trading jargon. Try to make it as simple as possible, and I think that's like the best thing for people, especially when they're new as well.
Thank you. I appreciate that, and I think maybe it's because I like things simple myself. You know, sometimes it can be overcomplicated. I think the simpler, the better. So no, I appreciate that compliment. Yeah. So just a little introduction for Pemi. Pemi trades full time. He's part of a team that works on the trading floor. And you also you remember what it was like to be a beginner, right? Don't you?
Yeah.
And all the terms, etc. Tell us a little bit about yourself and your journey, your introduction to becoming a trader.
Well, yeah, I've been full-time since last October. I got introduced to this opportunity. I think it was last February. Yeah. So I had met someone who's my former school teacher who had made a finance academy, and what part of the academy was teaching people how to trade. and I wasn't really interested in trading at the time. I was more interested in like just like learning about property. Eventually, like later on that year, around June time, I signed up. He told me a little bit more about like foreign exchange, and just the way he explained it to me. From there, I was just sold. So June, I signed up, and since then, it's just been a constant learning journey for me. For me, I feel that once you start to get into the world of trading, it's not as if that you learn for like a couple of months and then that's it. I think for me, my personal opinion, I feel that it's a journey that you're just constantly learning. Just you get taught something new every day, and I just feel that helps you become a better trader. So yeah, went full time October on the trading floor. It's been going really well. It's been all nice. It's been tough at times, but I've enjoyed the journey, and I've definitely benefited a lot from it. I've become a better trader, and yeah, I just feel that only being a year into it, I feel that there's just so much more for me to learn, and there's so much room for me to grow and become a better trader.
Excellent. I love that, because I think this is another thing I do like to let people know, that, with trading, there are ups and downs, right? And that's the reality of it,
Yeah.
as well as, for as much as people are making money, people are losing money as well. And this is why, again, one of my passions with this is because what I find is that people tend to jump into things some people tend to jump into things with 2 feet. And because of the lack of knowledge and the lack of quality education that they're getting, they often make mistakes and they lose so much money. And I really feel for them, because it's just not a good place to be in. And then there are others who don't realize that this is a good opportunity for them. And they just kind of need to have the basics shown them, just so they can understand, and that will help them to develop. We appreciate your journey, and we appreciate you coming to share your experience with us. I think it kind of makes it more tangible for people to see that actually you can have other ideas about what you want to do, but actually when you kind of get your head around it, this is something you could do, and even full time like yourself.
Yeah.
Fantastic. So I'm going to get some questions. We have some questions here from people that are following. Now, one of the questions that we have, or the first question, if you could answer, is how much do you have to spend if you're a beginner? So somebody who's new, they wanting to know, okay, I want to start trading. How much money should I spend?
So in terms of how much time you should spend, the general rule of thumb is to dedicate an hour a day to learning this new skill. It's not, if you choose to do, a bit more than that, than 2 hours, then 3 hours, then by all means go for it. I think for me, when I first started, I just wanted to go all in. So I knew that I wanted to spend as much time as possible each day, dedicating learning the principles of trading, learning the strategy I was learning at the time as well, just so I could be the best I could be. So some days it will be 1 hour, sometimes it will be 2. I would say the general rule of thumb is 1 hour, but if you really are committed into learning, into going all in this, and just learning every aspect of it, then spend as much time as you can on this, because this is one of those skills where you can't leave, no stone has to be left unturned. Like, you have to learn every single bit about it. Like, when it comes to like the strategy, you're learning in terms of your own mindset as well, because I know there's a lot of mindset and there's a lot of the psychology aspects that goes into trading as well, and that's something in and that itself, that's like a separate thing that you still have to learn as well, and it's a part of the learning experience. So yeah, that's what I would say, an hour minimum, and then if you choose to, just go for as long as you want.
That's great. That's great. So in terms of, for a beginner and the amount of money that they want to bring to their first venture, do you have any advice in terms of how much money that people should use? Or
yeah, I mean, it varies from person to person. I'd always tell people when they're first starting out, only invest as much money into this as that you're willing to lose. So this is where you have to get your investor mindset on. So if you feel that, if I put into £100 into this now, and say, for example, I don't know, like through like not using risk management, and I lose that the next day, then I'd be fine. If it's £100, 150, 200, 300, maybe even 1,000, only you would know deep down how much money you would willingly want to put in first. I would always say start small, but again, small is subjective. Like, my small could be different to your small, so that would be my main advice, really.
Fantastic. Thank you for that. And you mentioned risk management. This is something that we're going to be coming to in more detail in the weeks ahead, because I'm going to demonstrate not just how to have proper risk management, but also the ramifications of what happens when people do not put in the correct risk management. So thank you so much for mentioning that, Femi. We have a question here from Facebook. Someone's asking, what's your background? I'm not sure if you answered that fully before, but what is your background? And maybe let me infer here. I'm wondering if they're asking, did you have prior knowledge of this before? Are you a mathematician? One of the things people feel like you have to be great at maths for this. So can you tell us a bit about your background, please?
Well, to answer your question about being a mathematician, I'm far from it. I just about got a C in GCSE maths, and as soon as I got that, I was happy. But I've got no experience in this. I have a background in sports, so I did sports therapy in uni. So I graduated with a sports therapy degree in 2015. It was quite of a struggle. It's one of those roles where I felt that I was given a lot more than what I was getting out. It even took me like 4 years. No, was it 4 years? No, it was 2 years. Yeah, so 2 years after I had graduated to find like a full-time role, and then the following year I got made redundant. And from that, that redundancy, that's what kickstarted my journey. Because like a couple months afterward, I met the person who had introduced me into trading, and then a couple months after that, I just literally just went all in.
Fantastic. So that's a bit about your background. That shows that actually you can kind of come from any background and do it. You did sports as well. I did a degree in sports science, actually.
Oh, really?
Yeah. It's so funny. It's one of those pieces of paper that I'm not using much.
Yeah, same here.
Okay, so our next question: is it good to get someone else to trade for you? Okay, I've come across this question once or twice where people like the idea of trading, but they don't really want to do it themselves. They want to give someone else their money to trade for them. What would you say about that question?
It's very subjective. For me, I have my personal opinions about getting someone to trade for you. For me personally, I feel that because it's your own money, you should be more accountable for it. Like because say for example, if you're giving your money to someone else to help you trade, and say for example, you can only just see on your MT4, like if there's a wins and losses and all that stuff, like you have no idea what type of strategy they're using. You don't have no idea what the risk management is. You have no idea the strategy, risk management. You have no idea about their mindset as well on the day. So like there's so many different factors that come into play of this, and they're out of your control, and ultimately that could affect the trades that they're putting on as well. So you could end up by the end of the week seeing a whole bunch of losses. You could end up seeing your account blown. I see this so many times. Obviously like we've all seen those adverts on Instagram saying people they pay for courses or they pay for someone to get them to trade, and all of a sudden like their accounts all blown. This is part of the reason, because you have no accountability over your money. So for me, I feel that it gives you I feel it'd be better if you really want to get into this, then you really should learn the skill for yourself. Because keep in mind, like if we look at the bigger picture, what tends to happen is when you finally get to a point where you're consistent and you're profitable, you've learned a skill now that can pay you for the rest of your life. So why not invest that time into learning the skill, because it will definitely bear fruit for you in the future.
That's a great answer. I love the answer, because I think I guess in the question there is an element of, I think there's a bit of a reflection of the generation that we live in now, because we kind of want things easy and we want it quick, we want it now, right? So we don't necessarily want to put in the time. We don't necessarily want to do the hard part. And sometimes it's because we genuinely haven't got the time. One thing I realize about time is you kind of make time, right? I'm a believer in making time for what you want to do. And I think when you kind of exhaust that, you kind of have your limits. Everybody has the limits, but I think that advice is great. Put in the time, do the work for yourself, because as soon as you've given your money to somebody else to do that type of thing for you, you might as well have thrown it in the bin. Exactly. It's chance, isn't it? It's chance. You might as well just bring it back. This is it. And I do believe there are more horror stories with those types of things than there are success stories. Okay, so thanks so much for that. Okay, so I've got a question in here from Facebook that is asking, is trading more about hard work or good timing slash luck? Question mark. Person said they're not a huge risk taker, but they're willing to learn the skill and put in the hard work. Is trading Forex for them? So I'll put this up on the screen so you can have a read of it.
So it's
So
trading more
I
hard
guess the
work.
first part of the question is trading more about hard work or good timing slash luck? Do you want to answer that one first?
I would definitely say it's more hard work. If I'm being honest, hard work definitely. I feel that I've been on this journey for about nearly coming up to a year now, and I still feel like there's still so much for me to learn on this, and I don't feel I probably will get to a point maybe a couple years down the line where I'm like, okay, I know this like from the back of my hand, but I don't feel like I've arrived there yet. So I still feel that it does take a lot of hard work. Like I won't lie to you, trading it's not an easy skill to learn. Like if anyone tells you that you can pick it up in a couple of weeks and then you'll be rolling in the money, then I just tell you to run away from them, because they're probably trying to sell you their course, which doesn't help you become a profitable trader. So it is hard work. It does require you to put a lot of hard graft into it. And it does require you to be a bit of a risk taker. You know what? Because you're putting your own capital at risk every time you enter into the market. But you know, one thing I've learned from one of the people that I've learned from one of the teachers that I learned from trading is that everything that you want in life is on the other side of fear. So you need to be able to take on that risk to be able to see the fruits of what with trading, because I won't lie to you, like when you do apply yourself to this, when you do put in the card graph, you do see the rewards in it, and the rewards are great. So I definitely say it does require a lot of hard work. um if you are not much of a risk taker, then maybe it's not for you. But if you are willing to take on that risk, because you know that what, from what I've learned from the things the principles I've learned from risk management, I'm willing to take on the risk, then go for it.
Excellent. I love that. I love that Will Smith quote, right? That quote. Everything you want is on the other side of fear. If anybody hasn't seen that video, just type in Will Smith and that section. Very, very inspiring, but very true. Very, very
Yeah.
true. Everything that we want is usually on the other side of fear. Whether it's, I remember feeling similar types of things when I was about to get married. I remember feeling similar things when I was about to take my driving test, etc. There's always that funny feeling of, is this going to work out? I think I'd like to throw in my 2 pence worth in terms of that question as well, because they said they're not a huge risk taker. I think that is probably better for you that you're not a huge risk taker, because the reality is trading is a lot to do with confidence, right? So how much confidence do you have in the position that you want to take? How much confidence do you have in your strategy? And I think that last part of the question, they're willing to learn the skill and put in the hard work. I think that's the most important thing, because I think, like you said, Pemi, when you're learning it, when you're dedicating to learning that skill, it kind of, if we look at it like balance, I would say if risk is on this side, and your success is on the other side, so you have risk and success, what will happen is, when you're beginning, risk weighs heavily, right? It weighs very heavily because you don't know much. But the more you learn, is the more you, let's say the down is the best part to be, right? So the more you learn, is the lighter that risk is. So you're kind of reducing the risk as you go on, and that thus increases your success. The success becomes heavier, more weighty, and it increases the more you mitigate the risk. So I think the mitigation of risk is directly proportional. I'm using dictionary words here, but you can reduce your risk according to your knowledge and what you are learning. So the more you learn, is the less risky it becomes, right? So
Yeah.
I guess for anybody who's watching these Forex 101 sessions, if you didn't watch these sessions and you just started trading without any of this knowledge, it's a lot more risky than somebody who is watching these sessions, learning bit by bit as we go along, and then has some kind of knowledge to take into it. Would you agree with that?
No, yeah, most definitely. Definitely. I feel for me, especially with the type of strategy I'm learning as well, It's got me to a place where I'm always going to be risking less than what I can gain. So with that knowledge, I can enter the market. And you know what? If I do take a loss, I do take a loss. But at the end of the day, I know is that if I do hit my take profits from the next trade and the one after that, I know I've recouped that money and I know I'm gone back into profit. So yeah, it's exactly what you said. The more you learn, the more less you feel that you can take, that you feel like it's available.
Fantastic. Okay, I've got another question here that asks, how do you know when to place a trade? So you actively trade every day on your trading floor. Naturally, your trading floor is now in your own homes, I'm assuming, right? Because everybody's on lockdown. But yeah, so how do you know when to trade? How would you answer that?
So for me, when I have a set of, I have like a checklist and I have a trading plan. So I make sure, so when I enter the market, if I find a viable setup, I make sure I go through my trading plan to see if it meets all those confirmations. I go through the checklist. I want to make sure that, that this is the trade that, it's got all the confirmations we're looking for to my standard trading style. Once I've got that, I make sure that I'm trading in the right session times as well. So I know you covered, the session times. For me, from what I've learned, the best time, especially when you're trading like US pairs and the Euro pairs, you want to be trading those. I want to be particularly trading in during the London and the New York sessions, because that's particularly when you want to be entering. Because obviously, like during that time, that's when there's the most volatility in the market. So you want to be entering at those times. I know for me, if I'm entering outside of those session times, then my trade becomes less probable. So those are the way, that's how that's what helps me to figure out when I should be trading.
Fantastic. Thanks so much for that. I think it's a good question for the person that asked it. Sometimes people kind of get in at certain times and they don't know what's happened, and all of a sudden, because the volatility really does have a huge bearing on whether you're going to be successful in your trade or not.
Yeah.
So thanks so much for that. We'll have the last question now. The session's winding down. It's gone so quickly, but the last question is a question that says, what is the difference between trading and investing? So this person wants to know, what is the difference between trading and investing?
There's not much difference really. I would say with trading, you're looking to, obviously you're using your capital to gain a return, maybe on the day, maybe in the next couple of days or the next couple of weeks. Whereas with investing, usually that involves you putting your capital into like a particular product or a service that you feel that is going to appreciate and give you dividends. But but in the back of your head that you're not going to see that in return on your investment maybe in the next year or the next 2 years. There's a very thin line in between, like with trading and investing. For me, I feel that you can apply those the investment, I would say the investment mindset into trading, because obviously that you're putting your money at risk. At the end of the day, you're looking for a return. So you can start to, if you take, say for example, if you're taking the investment mindset into trading, you may start to see things from the bigger perspective, see the bigger picture, instead of just focusing on like the here and now, for example. So an example I can give is like you start to zoom out and go into bigger time frames, so like such as the daily, the weekly, the monthly, whereas before you was mainly focused on the 1 hour, the 30 minute, the 15 minute, where because on those smaller time frames it gives you like a small perspective on the market. But if you have that investor's mindset, you can see you want to go onto the bigger picture, see onto the bigger time frames to see what the market's really telling me. So yeah, that's what I would say. That's the difference really.
Fantastic. Thank you so much for that explanation. I think you're right. It's a very good description, and that idea of taking that mindset of an investor into trading, I think that's a very useful one. I've definitely applied that myself, and people who follow me have seen posts of trade that I took, and I held on to it for a long time, and actually it did return. It did bring rewards. It went very much into plus, but I had to hold that position. But those types of things, as we said before, it goes back to risk management, because it's impossible to do that on the Forex charts unless you have sensible risk management in there. So again, that's something we'll come up to. I did say that was the last question. We had another sneaky one come in from Facebook. So I'll post this one up for you. This question says, what do you deem as a good return on investment? So if you're placing a trade? What do you deem as a good return on your investment?
I guess it will depend on the type of trading strategy that you're doing. So for me, my particular trading strategy, I'm always looking. I'm always going to enter trades that have a 1 to 3 risk reward. So if I'm, say for example, if I'm putting on a trade, if it hits the stop loss, I've lost like 1%. But if it hits take profit, then I've gained 3%. So for me, a minimum of 3% on a trade is good for me. But it will depend. Obviously, like different strategies, they have different risk rewards. So yeah, so once you do go into trading, obviously find out about the trading style that you're doing, and also most importantly, find out what the risk reward is, so you can know what it is.
Excellent. It's all about pre-planning, isn't it? Knowing exactly what you're getting into before you get into it. And again, as I said, that's something that we're going to cover in sessions, in future sessions. Pemi, thank you so much for being with us today. Thank you so much for sharing your experience and your knowledge. I'm very sure that you're going to be joining us again in the future if you're happy to.
Yeah,
I always love hearing from people who are actively doing it every day. And also, you know, people that follow me, people that know me, I like to make things attainable. You know, I do know people who own and run hedge funds. You know, I know people that have been traders for years, from day dot, from before it was all digital. And sometimes we can hear from those people, but it doesn't seem like the average person can do it. It seems like they can be, you have to be great, etc., etc. But you look at me, you look at Pemi, hopefully you're seeing people like you that you can say, yeah, if they can do it, I can do it too. So Pemi, thank you so much. I really appreciate you joining us today.
No problem. Thank you for having me on.
And I will say to everybody who is watching, thank you so much for watching. Thank you so much for tuning in. We are going to have more sessions. We're going to have more Forex 101 sessions, but also I'm going to bring more sessions too. I want to do a business 101 session for you. So let me know if you are interested in business 101. Sometimes we take for granted that everybody knows what to do in business, but some people don't. We need to know the basics. If you want to have a business 101 session, please let me know. I'm also going to do a tech 101 session as well. And that people that know me know that as a passion of mine, technology, especially if it's helping you out in your new venture or in your new business. So we're going to have a tech 101 session. We're going to have all kinds of special guests. We're going to break things down and make it nice and simple and basic. So let me know. Give me some feedback. Are you excited about having, as well as more Forex 101 sessions, a business 101 session, and a tech 101 session as well? Please let me know. Give me feedback. Thank you so much for joining us. And we'll see you next week at the same time for Forex 101. Take care, stay safe, and see you next time.